I do that every day. Good morning and welcome to a new episode of today's Best Stock Picks. It's Monday morning, March 1st, 2021, off to a fresh start from what was a complete contrast between January and February. January was really easy to trade. February was mostly maybe one good week of trading and managing capital the rest of the month. If you're smart, you scale back a little bit on your share size. You scale back a little bit on how aggressively you were trading, especially on the longs. They weren't following through. But now we got a fresh start, and actually awesome to start the month. We got some good news, 3 or 4 different good news that we're going to discuss today. But more importantly, we're going to start to discuss NIO today and earnings that are scheduled after the bell. Workhorse actually has earnings pre-market. I'm doing this pretty early. It might not have reported yet. I don't know, but we're going to talk about NIO today. We're going to talk about some of the other electric vehicle stocks as well. Obviously, Tesla at the top of that list, and we're going to see whether or not there's a trade there right now, what we should be anticipating in earnings, and when you should feel comfortable, safe, like you have a high probability trade of jumping back into NIO specifically, which has taken a beating over the last, let's say 4 or 5 weeks, maybe even longer than that, literally to the day when NIO Day happened on a Saturday. The stock peaked out. It was sell the news, went sideways, and then started to trade lower now over the last I want to say about the last week and a half, where it really started to hit the skids, and it traded below some of the major key moving averages. So we're going to actually set up the trade today. Prior to this week, coming into this week, I had a new buy stop in NIO up at 65. That's kind of off the table right now. It's pretty far away. We're going to reset, build a new trading game plan for that, and we're going to give you the parameters on that today. So we're going to head right into it. If you find these videos helpful, do me a favor. Definitely click down and subscribe. I'd really appreciate it. But more importantly, give us a thumbs up, because that lets me know what kind of content you like. So the more I know what you want to hear, the more I know how I could possibly help you, both here in the stock picks as well as the education. I'll produce more of that kind of stuff. So thumbs up matters. I watch that kind of stuff to see what you react to. Just as importantly, if you have any questions about what we talk about in these videos, leave a comment below. I always get back to you as soon as I can. So let's get into it. We're going to first start out with some news, looking at what the futures are doing, the significant level the futures bounced off of this morning and last Friday where we held, and what that means going forward. So we're going to head right on over to the charts. So you can see here right out of the gate, we have the 50-period moving average, which is usually that line in the sand from really good momentum to, all right, this is where you need to step up or we're heading lower. And you can see the futures actually are now well bid, up big now. Let's take a look at why, though, all right? So obviously bond yields were the biggest reason that everybody was giving last week. And you had a couple of questions about it. And really what it comes down to is interest rates start to increase. It's going to cost more to borrow money, and that's not good for the market. It's basically been, again, exaggerating a little bit, basically been free money to borrow for a long time, which is keeping us up here. And as soon as we get a sniff of that, it's going to change. Things get scary. Bond yields rose pretty dramatically last week, and that's why the market got hit for a couple of days. Seems like that's easing. Are we out of the woods? No, not by any stretch of the imagination. So we need to keep an eye on this, at least in the back of your mind. Understand why when you hear bond yields are taking a hit, or excuse me, bond prices are changing and yields are going up. This is what it means. Think about yourself. If you could borrow money at 3% versus it going up to 5%, and you're borrowing billions of dollars, it makes a huge difference in the operating over the month. So that's why it's such an important part of watching the market. We're going to zoom over, and we got some more positive news, which I think has been really awesome, for lack of a better way of putting it. I don't know where everybody else lives, but down here in Florida, it seems like everybody's on like on the verge of getting back to normal. Johnson & Johnson got a new green light, which is great. We're getting more availability of the vaccine, which just would make things amazing. I don't know about you. I can't wait to get out on a normal basis, just go to a movie. So again, more good news, right? Then even more on top of that, we have the stimulus bill that was passed, I think it was late Saturday night, maybe even into Sunday morning. All good news, right? We're just going to head for the hills and just start to have a party again, right? No, the market got hit pretty hard last week, and it was on much, much bigger volume. That means that there was smart money selling. So what we need to see today, first today, we need to see exactly what we're looking at here in the futures right now, which what we call is well bid. Well bid means that we need to see a higher high, higher low, and it's actually not quite well bid yet. It's 5:40 in the morning. So we want to see this go well bid. So I'm giving you the visualization of what we need to see to start to feel comfortable. So what we're actually doing now, there's a trading term that on my trading floor in New York City, we used to call buying in the hole. So when you're buying in the hole, that means you have a strong stock that's pulling back pretty deeply, and you need to have the guts to buy as it's pulling back into a perceived level, or you find you see some proof, like I just said. And I say proof meaning well bid, which means higher highs, higher lows, and the smart money has stepped in over a 6.5 hour period from the open to the close. They pushed it up to higher lows and then created higher highs, which gives you proof, feedback that they're stepping up. So that's what we're looking for right now. So the SPY, all of these other stocks that are pulling back to specifically the 50-period moving average are an opportunity now to test your resolve of how you believe about the longer term picture and all of those different circumstances that we just gave about bond yields, COVID, and the COVID vaccines and the stimulus package. So the question now is, are we in the sell the news phase? Because obviously the last stimulus package had the market go up for basically 11 months and a tear. But it's a different situation right now. It's not at the bottom. We're actually near the top. We're, again, 2 sniffs away from new all-time highs again. So you have to really, buying in the hole right now, I will be doing it with you. I will be looking for stocks to buy that match this criteria that I just gave you. We're going to talk about a list of them today in just a second, actually. But the last time we got down here, we had a pretty vicious rally. However, I want to point something out, and I'm going to actually do it in the SPY because these are the little clues. This is the difference between chart reading and tape reading, where you actually put the pieces together to form some good ideas. So there's something we need to watch on the next rally in the market. So if we pull up the SPY, okay, you can see that the SPY actually closed right at that level. But this is the last time it got to this level, right? It had a really sharp rally. However, if you're a regular viewer of the channel, you know that we are big at watching volume in conjunction. And this was the part that scared us a little bit in the sense that it wasn't a time to really size up and get in there aggressively. So you see during this rally here, volume actually went down that entire move higher. So that's something we're going to be watching. If we go well bid today and start to make a new move higher, we need to see volume increase as it's going up. It's a typical accumulation day. It's a typical smart money move where they're like, okay, it's down to a price where you see it on CNBC all the time. We like it at this price. So that's setting the stage for this week and setting the stage for what we want to see and need to see, quite honestly, to feel aggressive or confident or have conviction buying in the hole, which means those strong stocks on the way down, looking for that reversal back up. So now NIO, obviously, after the close today, as again, workhorse pre-market today, NIO after the bell, NVAX, Novavax after the close, Zoom after the close, and DDD after the close. So the big thing with NIO should not be a shock at all is guidance. There's no doubt that they're the #1 company over there in China. However, the stock has now clearly broke. And I want to get into the actual trade of setting it up. So this was NIO Day here. This was a really good run, capped by NIO Day, which is a Saturday. And this was the Monday after NIO Day. And we really did nothing. We kind of went sideways pretty much for most of January into February. And then the selling actually stepped in. We looked to get long here when it finally started to break out. It did not hold, pulled the plug, got out quickly, and now it's below everything. So again, if you see over here, exactly what we just explained to look for, which is well bid. It did not go well bid. It did not have a higher high. It did not have a higher low, and it did not close near the highs. It actually went inside, consolidated, and broke down again. So let's take a look at the entire sector. What can we reasonably expect here? So obviously, we're taking a look at NIO, and we're taking a look at XPEV, LI, and we'll finish off with Tesla, right? So what does this mean? Everything, every single one of them is not looking great right now. So the bottom line here is this is not buying in the hole. This is buying a stock that's going down and you're hoping it reverses. The way that we trade, the way that we teach everything that we do in our community is we are looking for smart money already buying that security, already stepping up and making a real dollar commitment, and then we hop on board with them. That's not happening here. So at a minimum, we want to see the earnings come out, have a positive earnings reaction, smart money stepping back in and creating at a minimum well bid on the daily chart. And then hopefully that flushes over to well bid on the weekly chart. So that would mean 5 days of trading in a weekly chart, right? Where now 5 days worth of buying is the start of a new move in that direction. So we're going to take a look and see what that means on the chart. So we're essentially looking up at this area. If NIO goes well bid today, if NIO shows a higher high, higher low, closes above 47.50, above 48, and over the next 5 days can get back over 55, that's when I'd start to look. I'm not buying it as it's going down. If you get into sector rotation, industry groups, all of them are pointing down right now. Now, again, we could have the opposite of, the earnings come out and the thing flies back up. That's fine. As a professional trader, which I hope you aspire to be, and again, professional doesn't mean you quit your job. It could just mean that you are looking to take it seriously. You want to have conviction because the smart money is already in there and doing something. So that's the trade. That's how I'm mapping it out right now. And that's the exact price action that I'm looking for. Some other trades that we have today, FSR, Fisker, obviously in that same arena. Really good on Friday, massive volume, news out on the stock, looking for follow through today. Now, I'm not looking to swing trade the stock. It's a little bit far past what we call the optimal entry price. I will be looking to day trade it today on what we call the bullish echo. Then I'll look for it to pause for a day or two, and then I'll be looking to initiate a new trade. But this is something that should be in your watch list. Relatively inexpensive stock. Most people can get involved in this. Etsy actually had good earnings last week, bounced back up. However, again, very specific about the price. I'm looking for it over 230. If it closes over 230, then I will start. So it's an alert at 230, not a buy stop at 230. Trip, man, we called this stock out early last week. Hopefully you got involved in this one. We called it out right around 39 in that area and exploded. Had a really good move for a swing trader. You need to know your targets. Watching for that to kick back in today. Morgan Stanley, strong sector, obviously pulled back for a couple of days. This is not quite buying in the hole. It's not all the way down near the 50, which you can see here, like most other stocks are pulling back to. This is actually pulling back to a prior breakout level. So I'm looking to bid for this stock, hopefully somewhere around 76. I'm actually hoping a little bit for a lower opening to get it closer to the optimal entry. Starbucks, actually, interesting setup today as well. Good volume, punch through resistance. Only the first day, though. Here's a big thing that I cover all the time. Got up here and failed, got up here and failed, got up here and failed, and now this is the first day. Now, again, everything we want to know is, did the smart money step up? And in this case, they did. You can see the volume down here. So I actually like this breakout, but on the breakout today, it needs to be above Friday's high, and I'm going to start initiating a piece of my trade. I'm planning on doing it in two pieces because the last couple of times it got up here, it failed. I want to see it hold above that level, which is great that it's above 100. Twitter, which was on a tear and then exploded after earnings. I'm looking for this to follow through today as well and start a new swing trade. Airbnb actually had earnings last week and reacted pretty well also. And you can see Airbnb actually went well bid, trading higher today. I like this a lot better above 210. It's right around 208 and change, just below 209. So I'm setting an alert for 210 today before I start to initiate that position. On the other side of the market, CRM actually got clobbered again. You can see earnings last week. We actually had this as a short sale. So again, if you're looking to buy this, it's pulling back into support. So not the best place to initiate a sell short, which it was a great sell short for a day trader on Friday. We're looking for this support to hold. I still want to see it go well bid. I still want to see it get above 230. And quite honestly, even a little bit higher than that. Again, if we are looking to follow and piggyback the smart money, which is what we do, and then read the tape for the optimal entry, this doesn't meet that criteria. It's actually a short sell criteria, but you're not going to short sell it into support. So this is one of those ideas where the stock is great volatility, great liquidity, but it's not a trade yet, but it should be in your watch list. BLDR over 44. You can see, again, very similar to what we just explained in Starbucks. It keeps getting up to this level and failing, getting up to this level and failing. It's trading a little bit higher today, so I want to see it above 44, and then I'm going to look for an entry. And last but not least, a stock that breaks out quite a bit, can be a little frustrating. Probably got to watch this on a little bit higher time frame. CZR, Caesars. You can see really good clean breakout with the rest of the market pulling back. We'll call it, this is a part of the get out of the house stocks. So we need to mention the airline stocks, which all had a really, really good February. You can see this is the start of February. This is what most of them did. Pausing, looking for another entry here. So obviously that includes Delta, American Airlines, and we'll just finish up with LUV, Southwest, all of them having a really good clean pause here. So there's a lot to look at today. Again, have that in the back of your mind right now, buying in the hole, and it's going to show you how much conviction that the smart money has in this pullback and all of that news that we started out today. If we start to see well-bid candlesticks across the board, including semiconductor stocks, which have been really strong for most of 2021 so far, including Micron. We're going to be in good shape right now. So I'll be looking to be aggressive today, finally looking to get back in. If the market internals intraday are kind of wishy-washy, we watch the ticks, the VIX, the trend, a whole bunch of other things intraday. If those pieces look good, we'll be aggressive. And again, remember, we started out today talking about be smart with your position sizing and your trade management based on the market conditions, which means that you need to learn how to read the tape. You need to understand tape reading because you're going to be more aggressive when everything's lining up and you expect follow through. There's going to be other times where you can see some trades, but the market conditions aren't perfect. And on those, you kind of scale back your position size and you book profits into momentum instead of building a position. Today, I'm looking for the start of something new, a ton of good news. We'll see if the smart money agrees with that assessment of 3 different big headlines. If they do, we'll get in there with confidence. We'll let the trades run. If we start to see cracking and breaking down a little bit, we'll pull back and we'll be smart. That's what smart traders do. You don't dig yourself a hole just because the market's open, just because you want to trade. You trade because your edge is there and you think that there's a great chance of your profit target being hit versus your stop loss. We'll pay attention to that. We'll let you know as we see it unfold. So a lot on tap today. I'm excited that the new month has started. So if you like these videos, definitely click down and subscribe. Leave comments underneath the video. I'd love to hear from you about what kind of content you'd like to see. And of course, give us a thumbs up if you find it helpful, because that'll also give me signs that you like the content as well. So have a great day. Let's have an awesome, awesome week and trade like a pro today. Take care, everybody.